Hello everyone, today we will discuss the first chapter of audit, that is nature, scope and objective of audit. In this document I have covered all the important points in just 3 pages. If I change this document to portrait, it will be covered in 2 pages only. So as I discuss all the important points, I will request you to take a notebook and a pen and write points down so that you could remember the points better. Objective of audit, conduct of conducting audit of financial statement. Objective of auditor in accordance with SA 200. Overall objective of independent auditor and conduct of audit as per standards of auditing are obtaining reasonable assurance that the financial statements as a whole are free from material misstatement, whether due to fraud or error, and express an opinion that whether financial statements are prepared in all material aspects in accordance with AFRF. AFRF stands for Applicable Financial Reporting Framework. To report on financial statement and communicate as required by the standard of auditing in accordance with auditors finding. Auditors find. Scope of audit includes coverage of all aspects of entity, reliability and sufficiency of financial information, proper disclosure of financial information, expression of opinion on financial statement, does not include responsibility of preparing a financial statement, duties outside the scope of auditor, expertise in authentication of document, one investigation. If you are having any trouble in noting down the points, please pause the video. We will repeat again. Scope of audit includes coverage of all aspects of entity, reliability and sufficiency of financial information, proper disclosure of financial information, expression of opinion on financial statement, does not include responsibility of preparing financial statements, duties outside the scope of competence of auditor, expertise in authentication of documentation, fourth one, investigation. Next one is inherent limitations of audit. Nature of financial reporting involves a judgment of management. Nature of audit procedure. Practical and legal limitation. Management may not provide all information, may consist of dishonest people. Not in nature of investigation. Timeliness of financial reporting and decrease in reliance of information over time. Fifth one is future events. Engagement. Engagement is formal agreement between auditor and client in which auditor accepts to provide services to the client. Benefits of audit. High quality information. Shareholders need independent mechanism. Moral check on employees. Government authority determines tax or liability. Reliability relied upon by lenders, bank for credit decision may detect fraud or error, pointing out deficiencies. Assurance engagement. Practitioner expresses conclusion to enhance degree of confidence of intended users. Practitioner expresses conclusion to enhance the degree of confidence of intended users by evaluation of subject matter against criteria. Elements of assurance engagement. Written assurance report in appropriate form, sufficient appropriate evidence, appropriate subject matter, suitable criteria as three parties: practitioner, intended user and responsible party. Difference between reasonable and limited assurance. Reasonable assurance provides high level of assurance. Limited assurance provides lower level of assurance. Reasonable assurance has elaborate and extensive procedure. Limited assurance has fewer procedure. Reasonable assurance gives reasonable conclusion. Limited assurance gives limited conclusion. Example of reasonable assurance is audit engagement. Example of limited assurance is review engagement. Prospective financial information is information of future events. Practitioner provides a report assuring that nothing has come to practitioner's attention to suggest that these assumptions don't provide a reasonable basis for the projection. Qualities of auditor. Qualities of auditor includes tact, caution, firmness, good temper, discretion, industry judgment, clear-headedness, and reliability. Degree of independence backed by adequate independence. He must know thoroughly all the accounting principles and techniques. Engagement standards. Standard on auditing apply audit of historical financial information. Standards on review engagement apply in review of historical financial information. Standards on assurance engagement apply on assurance engagement other than 1 and 2. Standards on related services apply agreed upon procedures to information compilation, engagement, and other related service engagement. Standards on quality control (SQC) is a guidance regarding a firm's responsibility for its system of quality control. Why standards are needed? Standards are needed for carrying out of audit against established benchmark at par with global practices. Improve quality of financial reporting, promote uniformity as audit of financial statement carried out following these standards, equip professional accountant with professional knowledge, ensures audit quality. With this, we complete first chapter. Try to recite all the points and you should be able to uh, tell all the points by heart so that you could score good marks. All the best and thank you for watching the video.